All right. Hey guys, Brad here at Elliott Wave Made Simple. I've put in 10,000 hours learning Elliott Wave so you don't have to. Today I'm giving you levels on natural gas, oil, and silver. All right, let's dive into the natural gas chart. All right, so if you were in the Professor Trades Club last week, you know I was looking on the bearish side and we did not get the follow through I was looking for. And I want to give you the key levels to look at, but I also want to give you just a little insight into Elliott Wave. I'm doing some educational videos on Wednesdays, so I don't want to make this video too long by giving you too much information, but I do want to mention just a couple of key points. So last week we were looking short, I was bearish natural gas. This topped right where I was looking for. I've removed those fibs, keep my chart clean, but last week I had fibs here, got rejected in this general region I was looking for, so I was short. Came back up, got rejected a second time, got rejected a third time, came down and it was looking good, and I was looking for an extension here, did not get it, so that was the first clue that, okay, maybe something else is going on because it didn't make it to the 1618 fib. And it reversed incredibly strong. So I want to show you just these yellow fibs. If you've been following me at all, you know you see these same yellow fibs on most of my charts whenever it's applicable. This is the typical fib area for a three-wave correction. That is to say, this is the swing low over here. Then this is the swing high that I measured from over here, and this projected down and caught the last fib that is reasonable for a wave C, and it really caught that level beautifully. Look at this. How does price know that that fib is there? And the clue is it started slowing down at the 100 fib. Then it came down to the 1.236 fib, slowed down some more and consolidated. And then it came down one more fib level to the 1382 fib. And look at that. Bounced off it, came down, caught it again, held support. So if you're an Elliott Wave guy, you know you're looking for this A, B, C move. You're always measuring for it. We don't know exactly where it's going to play out or if it is even going to play out. But what we do use are parameters. So these parameters were very helpful. Now, to keep my chart a little clean, I'm going to get rid of the 100 fib, the 1.236 fib, so you can see very clearly it caught the 1.382 fib. Now, in my private coaching calls this week, several members, if you're watching now, you know who you are. I was teaching you about the ABC and how to place these fib tools exactly and why we look for this and knowing when to look for this. It is the context that really is the strength of Elliott Wave. It gives us a unique, and I mean unique. There is not another method that'll give you this kind of context. All right, so keep this video short. It's not an educational video. Let me give you levels. If you're a bull, natty gas, you do not want to see price come back down to this 2.776. So consider this somewhat of a line in the sand for bulls, 2.776. Now, this is also a fib area, which I've removed from my chart to keep it clean, but this is an area that I would look for resistance, and we are getting some resistance in this area. So if it wants to pull back and you're a bull, do not want to see it get much below this area. Can it pull back from here? Yes. If it does, I'll look for it to slow down in this area. See, on the way up, one of the things that got me to flip from a bearish perspective to a bullish perspective is parameters. That now I don't have them anymore on this chart, but I had a box right here, a measurement, an Elliott Wave measurement that informed me if price comes up and gets into some resistance here, then I'd be looking for one more move down to this level, and this would have given me a legitimate 5 waves down, which is an Elliott Wave clue that the trend has changed directions. But we didn't get that. What we have is a 3-wave move down, which is corrective, suggesting if it did not give up any continuation, that it could be a reversal, because after 3 waves, you look for a bounce and a reversal. Well, on that bounce right in here, it didn't slow down. It didn't catch rejection at all, and it just kept going. So that clued me in to flip long. Now, I don't like to flip long, just flip literally, like just take off my shorts and go long. I rarely do that, but I did it last week on Friday. So when it got through my parameter. So now I'm giving you a different parameter, which is if it wants to pull back, I'll be looking for it not to exceed this zone. Now look, if it wicks below the zone, does that automatically mean, oh, go short? No. This is the line in the sand, 2.776. This blue box is guidance if it wants to come back. Otherwise, I will be taking off longs up in this green box with an ideal target is up in this zone up here. Call it really the max zone, like the ideal, like lotto, like boing, boing, you're a winner is if it gets all the way up here to 3.04. I will rarely hold for the max target. In fact, I start peeling them off at the minimum target. So my first gain will be taken at 2.976. And then if it makes it up there, that is. And then the rest of the gains will be taken if it continues to extend higher. All right. So good place to mention this. If you're watching and you're new, give me a like, subscribe so you get further updates during the week when I update something. But the real magic happens when you're inside of the Professor Trades Club. I am doing private coaching calls in exchange for coffee. Sometimes I do them for free, just because for the club members. But I love donations, so why not? I'm going to spend some time with you, teach you how to take these measurements exactly, or answer other questions you may have. Drop me a comment if that sounds something you'd be interested in. We can make it happen. All right, let's move on to the crude oil chart. Again, I'm not going to spend too much time. I'm just going to give you parameters. Are we in a downtrend? Yes. If you zoom out, you can really see that we are in a long-term downtrend, but we bounce along the way. And as a day trade scalper, there's plenty of moves to catch. It doesn't really matter to me overall where crude is going, but I do look at the higher time frames to gather clues, and you should be doing the same. So price comes down into this box, which we were looking for and waiting for, and we got reaction. It did not give you a clean bottom. It was very overlapping and janky, and it didn't move in a clean structure. But I'm just trading the fib. So here are your parameters. If price in crude oil is going to be bearish, what I believe is going to happen is you're not going to make it much further out of this blue box. You're definitely going to hit resistance in this zone and see a U-turn somewhere between current price and up in the zone. So if you're a bear, a decent parameter to watch for is 69.49. If you're bearish, you don't want to see much above 69.49. If you're bullish, it's really the exact opposite. You want to see 66.95 hold. It has to hold if you're going to be bullish. And you're going to want to see price come up and get above this resistance. You want to see price get up above this resistance, maybe back test this area, and then continue higher. This is obviously a natural place of resistance as a previous high. It is also a target area that they like to target. So is this big long candle right here. So it could come up and grab the liquidity in this candle right in this area and then reverse back down. My particular bias is to the upside. So, and the target, by the way, is 75.02. But I will not just simply hold my longs looking for that target. No, I will observe price early in the week and see how does it behave in this area. How does it deal with this resistance right in this area? You can see it going all the way over here. But for the moment, call it 69.49. You want to get above there. All right. I will be taking off longs if I'm lucky enough. If this comes up and gets above here, I'll probably take some off in this area. Sometimes I'll add it back. If it holds support and starts moving higher again, I will add back what I took off. What I'm basically talking about here is risk management in a potential swing trade. So by the time, if I'm lucky enough to still be in any longs, by the time price gets up here, it'll be a very small leftover position. Okay, because I'm going to be peeling off the longs because I took multiple entries down in this area. Okay, so those are your crude oil parameters, 66.95, 69.49. These are resistance areas, which you can see on my chart. You can pause the video, take a screenshot of these so you can just see these levels during the week. This is a 4-hour chart. So this isn't going to play out in the first 12 hours of a new session. It's going to take time, several days or a week. So we'll know, unless it just completely gaps down and keeps going, which I find less likely than it going higher. But whatever, it's not up to me. Okay. So, hey, if you're finding value in these videos, make sure you subscribe, make sure you smash the like button. It gives me the encouragement to keep making these videos. All right. Also, drop a comment. If you've got a question about Elliott Wave, drop a comment. I'm big in education. That's what I enjoy the most is teaching you guys how to do this so you don't blow up your account. You can stop moving your stops. You can trade smaller and look for the targets. Swing trade using Elliott Wave. But in Professor's Club, we are scalping. My favorite thing to do is behave like a scalper, trade like a scalper, but leave a runner on when it goes in your favor. If you have multiple positions, if you've stayed small enough that you can take multiple positions on the entry side, you can take gains as it moves in your favor instead of being a greedy guy and saying, well, it's going to go all the way to the maximum target. And then it reverses on you and you give back all your gains. Pay yourself along the way. You can do that if you've been using small sizes. I know nobody wants to trade small. Everybody wants to get rich. Nope. Incremental gains, small, add up. Better consistency, never going to blow up account. All right, cool. Let's take a look at the last instrument we're going to cover today. It's going to be silver. Silver on the nano level is crazy and wild and very difficult to track. So I zoom out, look at more important, meaningful levels. I'm not going to share all that with you. I'm just going to show you the nano stuff. Okay, I've worked up this chart and bullish it is. Okay, silver continues to be bullish. As you know, I've been talking about 33, 34 for weeks and weeks now. We just cracked above 33 by a couple of pennies, and it did pull back in what is so far 3 waves. It's moving in threes to the downside, and it's moving impulsively to the upside. As long as it keeps doing that, as long as I can still see it correcting in 3 waves and holding support where I think a C wave should, then I'm going to remain long. So what's happening over here at the moment? Let me just give you some actionable parameters. This is coming down, obviously, right? Here's a high, here's a low, here's a lower low, lower low, lower low. It's made a few lower lows in a row, and you've got 2 lower highs. So obviously, this is important that it either hold the next level of support and resume higher. It needs to make a higher high. Can it do that directly from here? Yes, of course. Now, listen, I have a buy box here and I've left it there. Just it's been there, right, since whenever over here. I mean, I move it. I've only moved it latitude wise. I haven't moved it at all up and down in terms of levels. So at some point it was probably over here and I just move it over to kind of keep my chart clean. So it obviously has broken and wicked below that box on a 1 hour chart and up. These are just wicks down here. I'm on a 21-minute chart. Let me just show you the parameters. For a C wave parameter, again, the folks on my private coaching call know exactly what these yellow fibs are. They're the same measurement on every chart. A standard A equals C measurement is the 100 fib. Thus, there's a target down here. And as you know, if you're an LA wave person, wave C, a great majority of the time, unfolds in 5 waves. This is the white fibs represent the 5-wave structure that may be in progress to get price down into this zone. So what that means is this bounce could be a wave 4. If it is, it should not get much above 32.11 before it reverses. If this is going to come down and get into this zone for one final low, it is not going to come much above, if at all, this level, 32.11. So in other words, 32.11 is a warning to bearish view of silver if it gets above 32.11. But the real signal level is if it can get above this white fib right here at 32.35. That is why I put the green arrow there. It is much more likely that the low is in. Like, in other words, let's say it just comes up directly after tonight's open and it keeps coming and it actually gets above here. Yeah, it's going to pull back, of course. Nothing moves in a straight line, but this is a massive clue. Great clue for bulls is to get above 32.35. The second level area that I want you to watch is 31.45. If price comes back down, I'm going to look for it to hold here initially. Now, one of the great things about Elliott Wave is the context that it gives you. Now I'm trying to click this, but it won't let me because this thing is in the way. So let me just move that. All right. So The context that you get from Elliott wave is great because it's not about being right. Let me make this point because it's important. Trading, performing analysis, it's not about being right. Look at me, I was right. And you get so attached to being right. It's about the parameters. You want to know where you could be wrong. You have a view, you have a bias, you put on your fibs, you put on a trade, you've defined your risk. You want to know where you're wrong. And that's one of the great things about Elliott wave is it's giving up fantastic parameters so we can know where we're wrong. So back to the silver chart. If silver comes down to the 1, 2, 3, 6, if it extends, okay, do I like it? No. But am I going to panic and unload all of my longs? No, I'm not, because nothing has broken yet. Okay, this is a reasonable extension in white for a 5-wave structure to unfold. And there's also a C wave overall measurement in yellow. So in other words, the white fibs are the internal measurement of this move down. The yellow fibs are the overall measurement for ABC. So in other words, if it wants to come through this zone, this is the next level. There's confluence there between the nano count on the internal structure and the ABC overall structure in yellow. Okay, so not only that, if it wants to extend even further, let's see if there is a white fib that has any relation to that additional. Not really. So, but look, here's the point. Here are your parameters. Let me get rid of this noise, and I'm going to keep it very simple for you, just in case you're not an Elliott waver and you don't really know what I was just talking about. That's fine. The line in the sand for bulls is 30.94 for reasons I just showed you. So the ultimate line in the sand is 30.94. Sort of interim support should hold somewhere around 31.45, but I just showed you if it extends and wicks a little lower, fine. Or it can, okay, so that's your second parameter, 31.45. It could have already bottomed. Yeah, sure, it could have. Yes. So if that's the case, this is the low that you don't want to see break. You want to see it get above here. Now let's talk target. Honestly, this is very important resistance up here. The bottom side of this zone is just called 33.19. That is the first place. It would be reasonable to peel off a long or two. Although knowing me, I probably won't do that, because if it makes it up through this resistance and breaks this high at 32.60, let's just call it, and then it can come up here. If it gets above this high and gets up into here, yeah, I'd expect some resistance. So if you're a scalper, by the way, yeah, this is a place you could scalp just 10, 20 cents at a time. You will be profitable. I'm quite certain it's not just going to cut through here like a knife. But hey, if I'm wrong, fine with me. Short scalping silver is not my game. No, in fact, short scalping metals is not my game. I'm long swing. Now, with gold is a little different. Gold has a different posture than metals, so I shouldn't make generalization comments about metals in general. But let me just say, silver, scalping short in silver is incredibly dangerous to your health, unless you're very skilled and very nimble. Otherwise, just scalp to the long side, because sooner or later, this thing, look, if it makes it up above here, why is this a big deal? Now, I'm not going to show you the long-term chart. I'm just showing you the parameters, but I've taken the measurements on the long-term chart, and these are the fib targets with the magic fib. If you know trading, if you know fibs, you've been doing this long enough, you know the 1.618 is the golden mean, the golden ratio, the God level. That's at 36.47. So am I saying silver's going to 36.47? No. But what I am saying is the setup is there for that. But I'm not just blindly holding. I'm trading parameters. So I just gave them to you. There's a reason there's a bomb here, because I think if we come down and lose this level, I don't just mean a wick below this level. I mean, if we lose this level and then it back tests this level and fails to keep going above it, it's coming down, and you're talking multiple dollars. It's still bullish, by the way. It just needs that deeper wave two, which I won't get into. So, and just as this rocket ship is there, because to me, this is an important level of resistance. So in other words, this is the ceiling. This is the floor. We're getting a corrective action. We're looking for the bottom. So if you want to wait, makes sense. If you want to get in a swing long, makes sense. There's always going to be pullbacks. Now, you got to take some risks somewhere. So what I recommend is staying as small as you can. Then if it comes back down, add in this area. If you want to be aggressive, add in this area. If it keeps coming, Sometimes what I'll do is continue to be small, add small. And the deeper it comes, add bigger. And then the closer it is to the stop out level, if I'm feeling frisky and I like the structure of price, add again even heavier because I know I'm going to stop out fairly near. Okay. So that's just a tactic, a bonus tactic. All right. But that's the deal. So you've got your parameters, right? And the top of that box is 33.47. Take a screenshot. These are your parameters. I've given you four. 30.94 is the floor. 31.45 is the immediate, call it support at hand. And the next levels are on the way up. You want to see it get above 32.35. Take a screenshot. These are the levels. All right, guys, I'm keeping it short. I'm keeping it simple. Thanks a lot for watching today. I appreciate it. Thumbs up. You encourage me to keep making these videos. A coffee really it encourages me to keep making the videos. There's a link to coffee. Also, I do accept donations for private coaching calls so you can learn how to make these measurements on your own chart. All right, guys, thanks for watching. Have a great session. And whatever you do when it comes to futures, don't get killed. All right, guys, see you in the room. Bye-bye.